Hello, you're watching Dukascopy TV, and this is the week ahead. It's the start of a crucial 2 weeks for the US government, and I'm speaking to Forex trader Alessio Rastani about the impact the shutdown is having on trading as we approach the third week, and also the Forex market. What can we expect from the US Justice Department after comments were released suggesting it's planning a worldwide hunt to rid the FX market of rate riggers? Well, Alessio joins me now. Mr. Rastani, welcome to the week ahead. Firstly, what are conditions like as an active trader right now with the US government shutdown looming over the markets? Are you thinking about alternative safe havens like gold, or are you going to wait this one out?
Yeah, it's a good question. I mean, historically, and Wall Street Journal actually made an interesting point about this a week ago, is that historically, September, October has always been a bit of a bumpy period, kind of volatile period. And so it's not altogether surprising that we've gone through this kind of a bump in the stock markets and also in other markets too. But also historical patterns show that going back 50 years, November till beginning of May has been a very positive and bullish period for the stock market. So yes, although we actually were flat. I don't really have any long positions on the stock market right now, and I kind of unloaded them back in kind of late May in June period. But to be perfectly honest, going forward in November, after we pass 31st of October, in November, I'm looking to get long, and I would also say to everybody else who's looking to buy stocks to wait it out until November. That typically November period tends to be a very good time to get long and get invested in stocks, simply because the cycles have always shown that November till beginning of May, markets have outperformed than if you were just to do a simple buy and hold through the entire whole year. So that's what I'm looking for. And I don't think that this, to be honest with you, I really don't think the shutdown and the debt ceiling matter is going to change my view whatsoever. So yes, certainly the debt ceiling matter is going to be on the market's mind at the moment, and it's been delayed until November 22nd, so we're going to come and revisit this issue. But I think the bottom line is, come late November or middle November, I would be looking very strongly at an opportunity. So I would use this decline, any declines in the stock market right now, into November are going to be buy opportunities, because I don't think we're going to see those lows. So any lows we get in the stock market, let's say to 1600, that level there, I don't think we're going to see those lows again until probably next year.
Now, we're expecting US data dating back to at least the 4th of October. This is going to be released either tomorrow or later this week. This, of course, is the delayed data from the partial shutdown in the US. What are you expecting from this data, including non-farm payrolls, and is it going to affect your trades?
Well, I think one of the interesting questions from the actual payroll and so non-farm payroll is going to be this: if it's a positive report, will it actually influence the Federal Reserve decision to taper early? In other words, so let's say, for example, that come this week we get a positive jobs report, and I guess the question is, is this going to, how will it affect the market? Will the market, if it's positive, will the market affect negatively? Because that means there's a more probability that Ben Bernanke is going to say, okay, you know what, we've had more positive jobs report coming in, so we're going to start tapering early. I don't actually think that's likely, by the way. I don't think that the Fed taper in October is likely. I think December maybe is actually more likely than October, and maybe not even December. March might be the time when the Fed actually could decide to start rolling back on its quantitative easing program. So that's one of the things going to be on my mind, but to be perfectly honest, I don't think it's going to matter too much what the jobs... Yeah, okay, so we're going to have a temporary reaction to it, definitely. I'm not going to speculate as to what kind of jobs report, positive or negative, is going to be, but I think that it's not going to ultimately have an impact in terms of the Fed making an early taper. I don't think that's going to be likely until December.
Okay, what other key data will you be keeping an eye on this week?
There's fundamentals involved which we look at, but to be honest with you, the most important thing that I'm really watching are two markets, and that's gold also I'm looking at the yen. And the reason is this. For one thing, gold has just recently broken a key technical level. And I think there's a lot of manipulation obviously going on. Gold is a highly manipulated market. But last week, for example, apparently the cause of gold's decline last week, which broke 1270 level, was caused by one massive trade that was apparently done by one or two traders. But bottom line is we've broken some key support levels there at 1270. I'm actually looking for gold to take out its lows at near 1200 by 1179. That's going to be a very important thing to keep an eye on, because I don't think that the gold sell-off is finished. I think there's a deliberate manipulation going on to get people to sell their gold. And that ultimately is going to scare more people into selling. But I think a good opportunity will come in the next few months to buy gold really cheap. The other market I'm looking, and that's going to have a major impact, I think actually largely ignored in the news out there, is the Japanese yen. And that's because the Japanese yen actually bears a strong correlation, negative correlation, I should say, to the stock market. But if the Japanese yen suddenly starts tanking, that's going to certainly boost the stock markets. And in the opposite way, if the Japanese yen starts taking out its highs, making new highs, that's also going to put severe downward pressure on the markets, on the U.S. markets as well. So we're keeping an eye on Japan and the Japanese yen to see if what that market's going to do, what that currency pair is going to do, and the S&Ps.
Just one last question before you go, Mr. Rastani. Are you fazed at all by the prospect that the FX market is about to undergo arguably the biggest investigation in its history over the possible manipulation of benchmark rates?
No, I'm not. As a trader, you get used to these matters coming up one every now and then. Recently, we had, about a year or so now, there was an investigation into other matter like Libor scandal with London. But, the markets have continued to shrug this off, and they continue to go on. I wouldn't say I'm fazed by it. We might have a temporary headache in the market about that, but I don't think it's going to have a major impact on my trading decision, or indeed, I think eventually it's going to be shrugged off. Okay,
that's sadly all we've got time for on The Week Ahead today. I'll be back later in the week, but for now, don't forget to keep checking back in the coming days for the latest commentary on data and events that could affect the markets. The Week Ahead will be back next Monday, but for now, goodbye.